Hi there everyone, welcome to Super Savvy Sundays, where I help you become a super savvy seller or shopper of real estate. Now today I'm going to be talking about something that a lot of sellers and shoppers have some difficulty understanding, and that is pre-qualification versus pre-approval. Pre-qualification versus pre-approval versus loan commitment. And it affects both parties, the sellers as well as the shoppers. Now, have you ever noticed when you looked on the MLS and you've seen that there is a house that has come back on the market because the buyer's financing has fallen through? Maybe you've seen that. Well, it could happen because someone fell ill, there was an accident, perhaps they even lost their job. But often what actually happens is the buyer's financing has fallen through because they were not able to get the loan commitment. Now, prior to receiving a loan commitment, someone has to be pre-approved. But you may have heard the words pre-qualification. Are they the same thing? They're not really. A pre-qualification is based on something that the shopper or the buyer tells the lender. And it's based on what they say that they're earning, what they say are their debts, and what they say could be their credit score. Now, often the credit score is pulled, but a pre-qualification is just to give the shopper a rough idea of what they could afford, a rough idea of their buying power. So a lot of detail is not gone into with a pre-qualification. With a pre-approval, however, W-2s have to be provided. The income tax of the previous 2 years have to be provided. If you are self-employed, your 1099s have to be provided. And you have to go into detail in terms of your debts, whether they're student loans, whether they're car loans, and what have you. So there's a little bit more depth that goes into a pre-approval. And as far as a loan commitment is concerned, what has happened is that application for that loan has gone as far as the underwriter, who then has done all due diligence, and at the end of the process they're able to provide a loan commitment which says Mr. and Mrs. Shopper, or Mr. Shopper, Ms. Shopper, it doesn't matter, they are approved and we are committed to giving them X amount of dollars. Now, how does this apply to the sellers? Well, if you are given an offer on your property and accompanying it, you are given a pre-qualification, then it may just may happen, that 30 days, 60 days down the line, the loan isn't approved because maybe, as I say, a student loan may come up. The shopper may not have shared that there were alimony payments outstanding or whatever, and so you may find at the end of 60 days, 90 days, the house has to go back on the market because of that. And so as a seller, you want to be savvy, and as a shopper, you want to be savvy too. You want to go ahead and get that pre-approval, and if you really want to be super, you want to get that loan commitment so that when you put in that offer, it's a strong offer, you get that home, the seller sells you that home, and everybody's happy. It's a win-win-win. You are just super savvy sellers and super savvy shoppers. So I hope I've explained it. I hope I've done a good job. And that's it from me. I'll see you next time. And as always, let's make Orlando home.